Hi everyone. So I have been asked to go through these documents. There was agreements from basically Family Hive and from Betty B Holdings. There's a couple of K1 forms as well. So I'm not going to read these word for word because they are very long, very technical. I have read them. And I just kind of wanted to go through. I've had a few questions fired at me, especially with this Family Hive one, which is in relation to the hair care products. And I've been asked, does this mean she doesn't own the brand? That she doesn't own her own hair care products? I've had pointers to the morality clause as well. I have seen House of Chatter's video. That was before I read this myself. Emmy has some really good thoughts, and I like how she went through it as well. The issue is you can't take a clause, like one clause in an entire agreement, at face value on its own. These documents are very big, and they are meant to be read in as a complete document, and it's quite often a clause will refer to another clause elsewhere, by virtue of clause etc. This clause states that you are responsible or liable for this, that, and the other in the event that this happens. And that's kind of how they're built up. They are layers and layers and layers. So one sort of caution I would say, just starting out, is although it's really tempting to go straight to look at a clause and read it, in singularity, and assume that means something, exciting, I would never ever do that. But I'm going to start with Family Hive. I will go through the Betty B Holdings as well. Let's have a look. Yeah. So this agreement was created and entered into on the 4th of March 2022. And that is what is termed the effective date. So this agreement comes into effect on the 4th of March 2022. Now, the agreement is between Family Hive, LLC, which is a Delaware limited liability company, and Lol Hatter, which is also a Delaware limited liability company. Now, Lol Hatter, it seems to have, I'm hoping I'm saying this right, by the way. I'm not sure should it be LOL Hatter? I'm not entirely sure, but either way. So I'm going to say Lol Hatter. That is a company. It's very similar. It serves a similar function to Blake Link, in that it provides the services of Blake Lively. Right. So Lol Hatter is the lender, much like Blake Link was it ends with us loan out agreement, and both companies provide the services of Blake Lively, who is identified as talent. I can't even say that. I can't associate talent with her name without laughing. Sorry. It's a reflex. But anyway, so it looks like she uses Blake Link maybe for her acting services, and then she uses Lol Hatter potentially for her other commercial ventures, because Lol Hatter is also the lender in the kind of Betty Buzz or Betty B Holdings agreements as well. So that's the starting point with that. Now, the first talent is recognized and widely known throughout the world as a movie star. I mean, okay, if we're stretching, the meaning of these words, then okay, we'll give her that. So, but let's kind of summarize. I'm sorry. Okay, so what this agreement is, right? These are two very different agreements. The Family Hive one. So, to answer the question, does she own her hair care products? Yes, she does. And you can see that by looking at this agreement. What that means is, though, is she's obviously not sitting in her bathroom concocting and manufacturing, so she has to have partnerships. She has partnered with Family Hive. She's also partnered with Give Back Beauty. Is it Give Back Beauty? I think it is. Yeah, Give Back Beauty. And they are kind of, between them, they manufacture the products. What Blake Lively has here is an endorsement agreement, which basically, and this agreement controls, it gives Family Hive the right to use Blake Lively's name, her image, her likeness, her trademarks to promote the beauty brand. However, this is like this document gives Blake Lively near total control. So let's have a look. So the approval rights that Blake Lively has. Let's have a look. Yeah, so this bit, like, company owns or has the right to use trademarks and other intellectual property associated with the products, right? And that's what all of this goes into in great detail. There is reference here actually to Give Back Beauty. So it looks like Family Hive manufacture the products and Give Back Beauty kind of sell them. Yeah, on a wholesale basis. Okay. So what the sorry, I'm just keep getting my eye caught by words. Okay. So Blake Lively's approval rights. Through Lol Hatter, she must approve marketing concepts, every single one of them. This is like for all of these categories, every single photo, video, storyboard, rough cut, final cut, press release, social media post, packaging layout, photographer, videographer, director. Are we hearing the theme here? Pose, hairstyle, makeup look, wardrobe, event, guest list, journalist, seating plan, every use of her name, likeness, or voice, every distribution channel for her image. So this is total creative control. And it actually goes beyond industry standard, which does not surprise me. Even to the point where if she doesn't respond, the default is disapproval. And that is so that is held in clause 2.4.4, timing of request. Okay, I don't know if I can. Oh, I can. Okay. Yeah. So here. If lender does not approve or disapprove the request within 3 business days of the receipt of such written reminder, such approval request shall be deemed disapproved. So this is huge amount of control. And it's obviously a massive, overall, all of those things in collectively kind of represent a massive power imbalance in her favor. Again, not surprised. There is so there is strict exclusivity, but with carve-outs. So she cannot endorse or license competing products except non-key market one-off deals, editorial appearances, film/TV roles involving competitive products, red carpet appearances with competitive sponsors, charity events, and passive investments under 2%. So this is really being carefully crafted. this agreement, and the exclusivity clause, it protects her career. So there are heavy performance obligations as well on the company, in addition to all of this. So there is the family Hive got to hit a hair care threshold of 1.82 million in year one. They must also hit key market minimum sales, total business plan minimum sales, spend 25% of projected sales on marketing, provide luxury travel, accommodation, glam squad. What the fuck is a glam squad? Security. Okay. Just sounding very familiar still, hopefully. Maintain $3 million to $5 million in dollars in insurance policies. Maintain SAG-AFTRA compliance. Provide detailed annual and quarterly, reporting. So both quarterly and annual reporting. Allow audits and then pay royalties monthly or quarterly. Failure to meet any of these gives Lively her exit rights, so she can trigger her exit rights at that point if the company fails on any part of that. She also has other termination triggers as well. She can terminate if the company violates her core values, the company becomes insolvent, the company or its executives face certain investigations, sales thresholds aren't met, key markets or product categories fail to launch, royalties by year 3 are under $1.5 million. Additionally, though, according to clause 8.2.3, if Family Hive fail to align with Give Back Beauty, that is also a termination trigger. So that would be, when I say misalignment with Give Back Beauty, I mean on strategy. There's also a morals clause violations. So this is it's quite a, in my opinion, it's quite a broad set of unusually broad set of termination rights. So yeah, but the company has a morals clause. Now, this is quite limited for in favor of Family Hive. It's rather impractical as well. So, and I think a lot of people questioned, oh my God, this morals clause, is this what she's scared of? No, she's not. She's absolutely not scared because it's not going to happen. Let's walk through it. In the event that a talent is convicted of or pleads guilty or no contest to a felony or foreign jurisdiction equivalent but excluding vehicular related felonies or another crime involving moral turpitude, right? So that is your first point. The chances that Blake Lively is going to be at any point during all of this case convicted or plead guilty or no contest to a felony is highly unlikely. It's just not. She's alleging sexual harassment. So, and whilst we can all have our opinions on that, at the moment, she is, quote unquote, the complainant. She is the victim. So she's not about to be convicted or found guilty of anything. So that's point number one. So that is completely irrelevant. And then you got B. Talent commits an act or has committed an act that, after the effective date, is reported in at least 2 news publications, including online publications of stature and reputation similar to that of the New York Times. So they're saying, look, these 2 news publications, they have to be huge giants in the journalism world, and they have to be to the similar level of the New York Times. So another one could be, they also have to be, they have to be of significant stature. So that one, another one could be Los Angeles Times, is it? I'm are not 100% au fait with American news outlets, but they would have to be big. Which, and that it doesn't end there. So, which in either case, one justifiably shocks, insults, or offends a significant portion of the community in the metropolitan area of New York City or the greater Los Angeles area. How many people are in those areas? It's got to justifiably shock, insult, or offend a significant portion of the community. That's not going to happen. That's not going to happen. 2, causes a material and lasting, and that's an and 2, so both of these apply, causes a material and lasting adverse effect on talent's public image or company's public image. Now, her reputation's in the tank, okay? But if we remember, let's look at the backlash. When did the backlash occur? Well, arguably, we can say around August 2024, in line with the promotion of these products. But a lot of what has actually been come forward has been old videos, old interviews, showing her past behavior on Gossip Girl towards Shusty. Stuff with her husband. Her husband's not part of this, so whatever he does is not part of this. But they are kind of images and interviews that predate the effective date of 4th of March 2022. So they're not new things that she's done. I mean, there's a lot that we could say, oh God, she's immoral, her reputation. There's a lot of stuff she's done during the promotion of this movie, which is after the effective date, which are also directly tied to some of these products as well. But can we say that it's her fault if Maximum Effort was leading the marketing? And her argument is even that it was Wayfarer who was marketing. So can we tie it back to either specifically Blake Lively or Lol Hatter? We can't tie it back to Lol Hatter because Blake Lively, during that period was under license with her other company, Blake Inc. But there's nothing, there is nothing that's going to go into 2 publications that is going to meet these criterias. It's not going to happen. The only thing potentially is if she loses her case, she loses her case, right? That's not going to be enough either. What I think would need to happen is Wayfarer appeal their case, which is extortion. Yeah, and win. That's what, and then we are really reaching. Because the other problem is how often are the New York Times reporting anything, or any mainstream media of the New York Times caliber? How often are they reporting anything whatsoever that goes against Blake Lively, that makes her look bad? And the New York Times are even less inclined to do it because, they were part of the lawsuit. So these conditions are not going to be met, I don't think. Now, I'm sure great care has been taken. I don't think it's just to protect this company or this brand. I don't think it's just to protect any one brand, because she's got numerous kind of agreements, endorsement agreements, and corporate structures and various things. There is, it's like a spider's web almost, or a rabbit warren of, agreement on agreement on agreement. And there are so many partnerships involved with a lot of things. And I don't think that this clause is going to be invoked. Someone said, oh, is this because did she want to dumb down the R-rated part of the movie because of this? No. actually, it clearly says here, for the purposes of clarity, talent's political activism, talent's appearance in movies, including without limitation R-rated movies, and reportage of talent as a victim of a crime or as a party to a civil action to protect or defend talent's rights of privacy or publicity shall not be deemed a violation of the moral provisions set forth in this section 8.2.4, and companies shall have no right to terminate this agreement thereof. So what we got is two things there. One, as I said, she is the victim. She, at the moment, she's the one who's alleging the heinous act of sexual harassment has been perpetrated against her. So technically, she's a victim. Now, there's no crime, but she is a party to a civil action to protect or defend her rights of privacy, etc., etc. I mean, she has literally got, false light. She's got defamation. She's got retaliation, which would be, her trying to defend her rights. So that is that first part. She's already protected there from any action that's going on right now in New York. But also, her appearance in an R-rated movie is also not sufficient for the company, for Family Hive, to invoke a right to terminate this agreement. So that is not happening either. It's a good thought process, though. It was interesting, but no, this morals clause is so narrow. It's incredibly narrowly defined that, it specifies that in the event that she's in the situation she's in now, basically, that Family Hive have no right to terminate. So the termination rights, so the company can only terminate overall if Lively materially breaches and fails to cure, if she dies, if she becomes disabled. There's obviously the morals clause, which is, like I said, is so narrow. And if there's misalignment after year 1. The company cannot just terminate for convenience. They can't terminate necessarily if, Lively's reputation is kind of bringing down the company, the brand. It has to be so significant. And what we think of as significant is not what this contract is kind of defining as significant. Like it says here, 2 publications, huge publications, and there has to have been justifiable offense caused to the vast majority of the community in the metropolitan area of New York City or the greater Los Angeles area. And in addition to all that, there has to be material lasting adverse effect on Lively's public image or the company's public image. Well, when her reputation took a bash in August, it lasted a couple of months. It quickly come back up. That is not lasting adverse effect, because her reputation started to come back up. If she hadn't filed this lawsuit, everyone would have forgotten about the ridiculous marketing for the movie, and everything would be all good again. What else did I have? Sorry, I did make some bullet points. Okay, so the company owns all marketing materials except her likeness. Lively owns all talent rights and talent trademarks. Family Hive cannot file trademarks which contain her name, and if they do, like any accidental rights that they do acquire, automatically revert to her. So that's to protect Lively, and it prevents the company from hijacking her brand, essentially. There's a wind down period if the agreement ends. except for certain lender-triggered terminations. So if there are certain lender-triggered terminations, liability can terminate immediately. But absent that, in other scenarios, the company gets 6 months to remove her name and likeness, phase out talent trademarks, and then sell off remaining inventory, which is a fairly standard sort of point in these things. Marketing commitment failure. So if Family Hive failed to spend 25% of projected sales on marketing for 2 consecutive years, it is a material breach. So yeah, this endorsement agreement is drafted overwhelmingly in favor of Blake Lively. She has effectively creative control, approval control, exit rights, IP ownership, royalty protections, marketing spend guarantees, audit rights, territory and category vetoes, moles protections, which is a lot. The company has heavy obligations. It has limited termination rights, high financial exposure, and strict compliance requirements. Essentially, this is kind of what a top-tier celebrity deal looks like when the celebrity has maximum leverage. Okay, maybe we go to the Betty B Holdings. Okay. Okay. So this is the second amended and restated limited liability company agreement. This is dated May 19th, 2023. Okay. So the effective date is obviously May 19th, 2023. And this agreement involves Betty B Holdings LLC, a Delaware limited liability company, right? So they are known. When I say the company, it's because it literally they are known as the company. IPON or IPON Holdings LLC, a New York limited liability company. That is actually Ryan Reynolds' company. It's one of his companies. You got Lol Harter, the Delaware limited liability company, which is going to be called the lender. We obviously we know that is Blake Lively's loan out company for, I believe, commercial products. Belfair Capital Partners, a Delaware limited partnership. Greer Frusa LLC, a Delaware limited liability company. ACG Buzz LLC, another Delaware limited liability company. And then it's got each other person admitted to the company as a member in accordance with the terms hereof and listed on the schedule of members, individually a member and collectively the members. Okay. All right. So I have some notes here. So this is an entirely different agreement to what we just read with Family Hive one. Let's have a look. I will compare the two at the end, but we'll just go through this agreement. So this document basically controls ownership, voting power, capital structure, investor rights, incentive units, restrictions on transfer, endorsement obligations, exit mechanics, anti-dilution protections, and control of the Betty Buzz and Betty Booze brands. Okay. Betty B Holdings LLC is a parent company. They own Betty Buzz LLC, which is the non-alcoholic beverages. There's a company called BBZ IP. So BBZ IP Holdings. Sorry, I can't even read my own writing. They hold the IP for Betty Booze, and then we got Betty Booze Opco LLC, which oversees operations. So this agreement governs the relationship between Ippon Holdings, which is a Ryan Reynolds entity, as I said, Lolhata, which is Blake Lively's entity, Belpa Capital, Greer Pusa, ACG Buzz, and other investors. It is a multi-member, investor-backed, celebrity-driven brand structure, to sum it up. So this is the corporate layer that sits above the endorsement agreement. So the Family Hive document is about Blake Lively endorsing a hair care brand. It is her hair care brand, but, she's kind of subcontracting her celebrity status to her own product, to the companies who are manufacturing and distributing her products, if that makes sense. Whereas this document is about Blake Lively as an equity owner in the Betty Buzz, Betty Booze beverage empire. Okay, so Lolhata is a member. They have equity, voting rights, anti-dilution protections, transfer restrictions, endorsement obligations, which is via a separate agreement. This is the ownership side of her beverage business. So she absolutely owns this brand and these products. Okay. The company was formed through a complex exchange. So the structure is all prior owners of Betty Buzz contributed their interest to Betty B Holdings. Betty B Holdings then issued new units to these contributors. New investors bought additional units in the 2023 financing round. And then incentive units were expanded for employees. This is a classic roll-up financing plus incentive pool expansion. Okay, so the term endorsement agreement, the amended and restated endorsement agreement between the company and the lender. There are repeated references to this. What this means is her endorsement obligations are contractually tied to her equity. Her equity rights may depend on compliance with endorsement duties. Investors rely on her continued participation. So this is a celebrity-driven brand, not just a celebrity-endorsed brand. There are there are transfer restrictions which are incredibly tight. Members cannot freely sell their units. Transfers are restricted to affiliates, family members, estate planning vehicles, certain permitted transferees. And what this does is it prevents hostile takeovers. It prevents unwanted investors. It also prevents loss of partnership tax status. Let's see, what else we got? We have a restricted activity clause. This limits Blake Lively's competitive behavior. Although, according to Sony, nothing can limit that. Sorry, side joke. So the definition of restricted activity prohibits members, including Lively's own entity, from endorsing competing beverage products, participating in businesses selling competing beverages, being connected to companies where more than 25% of the revenue is from non-alcoholic beverages. So this is non-compete at the ownership level. And it is separate from her endorsement non-compete, because don't forget there are two factors. One is the ownership, one is her endorsement, basically as a brand in her own right. There are major member rights. Major member is defined as someone who's invested at least $500,000. Major members typically receive enhanced voting rights, information rights, veto rights on major decisions. It's a standard investor protection mechanism. There's a board. The board controls company operations, capital raises, incentive unit issuances, major transactions, and intellectual property ownership, subsidiary management. Members have limited direct control, which is quite typical in investor-backed companies. Okay, so the sale of the company is tightly defined as well. Sale of company includes the sale of more than 50% of units, a merger or consolidation, sale of more than 50% of assets, change of control, but it excludes IPO, internal reorganizations, affiliate transactions, equity raises where proceeds go to the company. I should probably say IPO. It stands for initial public offering, and that is basically the process where a private company offers its shares to the public on the stock market for the first time. Just to clarify that. Where was I? Yeah, so this protects these kind of rules basically protect investors from being forced into a liquidity event they didn't approve. Let's see. So how does it compare with the Family Hive agreement? Okay, so this document, the Better Be Holdings Agreement, its purpose is ownership, governance of beverage brands. Blake Lively's role in it is as an equity owner, an endorser, and a restricted competitor. Whereas in the Family Hive promotional services and license agreement, that is an endorsement and licensing for a beauty brand. And Lively's role in that is as celebrity talent with extreme approval rights. What they show together is that she is both a brand owner and a brand endorser. Her entities, Lolhata, are used consistently across ventures, and she negotiates maximum control in every deal. And obviously, we all know that. Now, her hair care products, because because the suggestion was she doesn't own it. She does own it, but it within a larger corporate structure. So she is not the manufacturer. She is a controlling creative force. I'm sure she did come up with the concept, the products, but she needs then to bring in partnership with a company that's capable of manufacturing, of distributing and marketing. She might need, investors, etc. And that is where Family Hive come in. That's where Give Back Beauty come in. So I'm just sorry, I accidentally left the studio instead of the document that was in front of me. 1 second. Okay. So it was. I want to go back to the Family Hive document. Where is it? Yeah. So there is reference to a side letter. Is there a reference to? Let me just see. Yeah, and a guarantee. Okay. So what that tells me is, right, that there are references to a side letter, a guarantee, and an LLC agreement. This suggests that she holds equity. These documents documents often contain equity grants, profit interest units, governance rights, liquidation preferences. So it's highly likely that she has an equity ownership, but this document on its own, which is all we have, doesn't show that. But she does not own the operating company outright. Like Family Hive LLC is the company that manufactures, distributes, markets, and sells the hair care products. She does not own Family Hive outright. She is the celebrity partner, not the sole proprietor. But she does have unusually strong control, far beyond a typical endorsement deal. And this kind of arrangement is quite it's a celebrity thing, I guess. Rihanna had a similar model with Fenty Beauty, Hailey Bieber with her brand Rhode. I'm trying to think. Selena Gomez with Rare Beauty. So to sum it up, does she own any of this? What's the real answer here? Well, she owns her name, her likeness, her trademarks, and her creative direction. She likely owns equity in the brand. I'm talking about the hair care. We already know she does in the Betty Buzz stuff. She does not own 100% of the company that produces the product. She may now she could own absolutely none of it at all, but she may own a percentage of it. We do not know. She is the controlling face. I mean, that's a technical term, but it's so literal as well. She is the controlling face and creative authority, not the operational owner. So, and as I said, this kind of model is quite commonly used and by celebrities. Okay, let's go to the K1. So this is going to be the 2023. So this is the first year. It's important to remember that as well. This is Betty B Holdings. Okay, where's a good starting point for this? Okay, let's start with the K1. So K1 is basically it's issued by partnerships, LLCs taxed as partnerships and certain investment funds, and it reports each partner's individual share of things like profits, losses, capital gains, interest income, deductions, credits, etc., etc. So that's what that is there. It exists because partnerships are pass-through entities, which means that the business doesn't pay corporate tax. All financial results pass through to the owners, and each owner pays tax on their share, even if the business didn't distribute cash. It's a tax reporting mechanism, basically. Okay, so what do we learn from this? I'm going to have to flick back and forth to show you the differences, but basically in this one, this is the first one, 2023. We've got the profit, the loss, and the capital all stated as beginning and ending exactly the same. 4.8206490. So on each line for the profit, for the loss, for the capital, for both beginning and ending, it's all exactly the same. Now let's go to the following year. And it has changed to various. If you can, I'm assuming everyone can see that. Various. Okay. So why has that happened? Well, I mean, again, these are just opinions. I can't be 100% sure because this is limited information. But what I think has happened is the partnership has changed its capital structure. Now, that could be due to new financing or unit conversions, incentive unit vesting, or recapitalization. So when we now have various percent, that means her percentage has changed during the year. Now, it could have gone up, it could have gone down. So the K1 cannot show a single fixed rate. And this happens when it's quite common when new investors enter, or units are reclassified, or capital accounts go negative, which hers seems to have done. So that is that. Now, capital account movement, this is the clearest indicator of economic performance. Okay, so back we go to 2023. Okay. Okay, so beginning as 0, this is the first year as a partner, okay? So contributions, $375,000. Then we have the net income loss, and that's $438,999. Other increases, $708,979, and then ending capital, $644,980. So she put in $375,000. The business lost money, but she received a large other increase. Okay. The other increase being the $708,979. It doesn't say what the other increase is or where it has come from. It is likely due to allocations of equity value, revaluation events, or capital reclassification from the exchange agreement. Her ending capital was positive. So now we go back to I'm really sorry. I keep forgetting I'm screen sharing and going out of the wrong screen. Right, okay, so now we go back to 2024. Do it right this time, Leanne. Okay. So here, let's have a look. So her beginning was $644,979. Yeah, here. Her net income, her contributions were 0. Her net income loss was $3,486,225. That would be in the minus because it's a loss. Other increases, nothing. her ending capital is minus $2,841,246. So what happened there was, what that means is the business allocated very large losses to her in 2024. Over 3.48 million. Now this pushed her capital account deeply negative. A negative capital account is not unusual where this is early stage consumer brands, companies with heavy marketing spend, companies raising debt, or companies allocating losses based on ownership percentages. It does not mean she owes money. It means the company's tax losses exceeded her basis. Okay. So, to compare and contrast, the recourse liabilities in 2023 were nothing. It was zero. In 2024, the recourse liabilities were 3 million. So what that means is Lolhata was allocated 3 million of recourse debt. This usually happens when the partner guarantees a loan or the partnership agreement allocates recourse debt to specific partners. Now, I think I know what happened, so I'm just going to move to another document. Okay, so found it. So this section here refers to a loan agreement. It's not letting me highlight it. Ugh, right, okay. So we can see that Betty Buzz is a borrower. The company, which will be Betty B Holdings, is the guarantor. BBZ IP is a guarantor, and Belfer is the lender. So there was a senior secured loan agreement between Betty Buzz and Belfer. Okay, so the reason why Lolhata may have been allocated $3 million of recourse debt is because of the involvement of this kind of Belfer senior secured loan or a later financing round. It may reflect a guarantee or risk-bearing allocation, which is tied to her endorsement obligations. It's a major shift. It increases her tax basis, which allows her to absorb the large losses. Now, people are going to be like, oh gosh, this is evidence that, her company made a loss, and it's all Wayfarer's fault. It's the backlash, the retaliation. I'm sure she's going to be trying to rely on that. That is not necessarily the case because so the operating losses increased dramatically in 2024, but this is consistent with scaling production. So where production increases, your costs increase. Expand in distribution, again, costs increase. The launch of Betty Booze, because this is largely an agreement for Betty Buzz, which is the non-alcoholic, but Betty Booze was also launched. And that would have had an effect on operating costs. And initially, these can be in a negative. These can look like losses initially. But it also may be down to heavy marketing spend. We know that she was piggybacking on the movie, the marketing of the movie, quite heavily. That does not mean that there wasn't still heavy marketing spending. Her guaranteed payments, by the way, also increased, which means that she was paid more for services, which are likely to be tied to the endorsement agreement. Let's have a look. I'm not going to flick back and forth the documents. So the category percentage of ownership, right? In 2023, it was fixed at 4.82%, as we saw, right? And then in 2024, it changed to variable. So what that usually means is the cap table changed. Then we have a capital account, right? That was positive. It was plus $644,980. Yes, that's right. And then in 2020, that was in 2023, and in 2024, it was in the minus. It was, minus $2,841,246. There were heavy losses allocated in 2024. Contributions. In 2023, her contribution was $375,000. In 2024, there was no contribution. There was no new capital from her. Recourse liabilities, right? So in 2023, that was zero. In 2024, it was 3 million. So she either took on or she was allocated more debt risk. Ordinary loss in 2023, that was minus 446,000. And in 2024, it was minus 3.47 million. Business losses grew significantly. Capital gains. So in 2023, that was minus 250,000. I'd have to go back and check that. I'm pretty sure it was. But in 2024, it was minus 2.5 million. So there was a major gain event in 2024. Hold on. I'm going to go back and check those. Okay. So it was so this is the 2023 document. So let's have a look. Yep. So 250,000, give or take. That was for net short-term capital gains for loss. And then let's just see what 2024 says. Okay. So net long-term capital gain loss $2,389,726. Okay. Yeah. So there was a major gain event. Now, when I say major gain event, it doesn't mean that she majorly gained in something, but there was something. It was an event in 2024. We don't know what. Guaranteed payments. So I'm going to show you this. Guaranteed payments. Okay. So this is 2024. So this is being paid out, right? So it's not that it's in the minus. It's what's to be deducted. Now in 2023, the deduction that she was paid was 5,700. In 2024, it was 35,000, nearly 35,500. So she was actually paid more for her services in 2024. So to kind of summarize it now and bring it all together, when it comes to Betty B Holdings, she is definitely, absolutely a equity owner. Her ownership percentage changed in 2024, likely due to restructuring. She absorbed large tax losses, which only happens when you are a real owner. She was allocated $3 million of recourse debt, which is a serious ownership level responsibility. She received capital gains, meaning she participated in value creating events. And unlike the Family Hive, like this agreement is not an endorsement only agreement. This is equity participation. So that's to sum it up. No, I don't think she wouldn't have been affected if the movie was R-rated. No, I don't think she's concerned about any morality clause because it's so heavily in her favor. Even though it puts a minuscule of responsibility on her, it is nothing. And this there is an inbuilt protection, as I said, for the scenario that we're in now is that she's embroiled in a civil action in protecting her rights of privacy and publicity. So she won't trigger anything there where the agreement can be terminated. Not everyone enjoys these kind of things. They find it too technical or too boring. And I have kind of given very broad overview. It's hard to simplify these things. But hopefully people will understand what I'm trying to say. And again, this is very much my opinion. This is how I'm reading these. Someone else may read them and how come up with something, entirely different or different in various points. And that's absolutely fine. My knowledge comes from how we kind of predominantly work in the UK and what these definitions mean. But, they also do apply largely globally as well. So, and I have definitely been working in companies which have done global transactions. But we are very limited on the documents here. So some of it, I can say, well, this document references this other document and this other document, which should suggest this. But without seeing those other documents, it is incredibly hard to be 100% sure. So I'm not sort of saying, oh, this is definitely what's happening, but I'm kind of giving a bit of context to what these documents showed to me. Family Hive is an endorsement agreement. That is it. There are partnerships. It is quite clear that she is not, baking hair care products in her kitchen. That's not happening. She has to outsource that. And therefore, there are agreements for manufacturing, distribution, marketing, which she has with Family Hive and also with, if I just share this tab, this is, you can see the Blake Brown logo at the top. What is Give Back Beauty's relationship to Blake Brown? Give Back Beauty is a global beauty group engaged in the creation, manufacturing, marketing, and distribution of fashion, lifestyle, and talent-based beauty brands, which is what this is. A talent-based beauty brand across the fragrance, skincare, makeup, hair care, and body care categories. Give Back Beauty was thrilled to partner with Blake Lively to create Blake Brown. Okay, so and Give Back Beauty, I know early on in this case, some people thought there was a link between Blake Lively and Give Back Beauty. There's not, because there is a company called Give Back Lively that also has nothing to do with her. I feel like it's important to just point that out. If we go to Give Back Beauty, they actually have on their webpage here beauty licensing. These are the categories: beauty licensing, and then you got beauty incubation, and they got the Blake Brown, products in that category. So, what is beauty incubation? And what they say is we incubate new brands with established and emerging talents and founders. Our latest success is Blake Brown Beauty, created with Blake Lively. So whilst Lively is running around claiming all these losses, and I'm not sure there are some losses, but it's not quite as simple as she's painting it. Give Back Beauty seems to think that, her brand is a success. I don't think there's anything more on this. It's interesting when you delve a little bit deeper to see, all of these players in here. But there are a lot, especially in the Betty B Holdings. There's so many players. You got all kinds of companies. There's about 5, 6, 7 companies all part of that agreement. So you can't just take one aspect on isolation and draw an analysis and a conclusion from it. It's just not that simple. The agreements are tailored so that each each party to the agreement knows their rights and their responsibilities and their liabilities. So yeah, I think that's that. If anyone's got any questions, or not clear on something, please do leave a comment. I'm quite happy to try and answer it. This isn't overly relevant. This is relevant to her losses, but again, there are explanations for why she is technically the K1 form shows losses, and for Lively to be sort of saying, well, it's you can't just go in and say, well, look, I've made a loss, so Wayfarer, give me my money back, you smeared me. She cannot do that. She has to prove, and I think she's going to struggle here, that Wayfarer directly were responsible through this smear campaign, right? Because that's her allegation. So she has to prove that, one, Wayfarer did smear her in retaliation to sexual harassment. She's got to prove, well, the starting point really is she's got to prove sexual harassment. Otherwise, nothing else matters, right? She's got to prove sexual harassment. No one's seen any evidence. Great. Okay. I think we're going to struggle to get to point 2, but, just for shits and giggles, let's just imagine that she does meet that and she is able to prove sexual harassment. Okay. She then has to prove Wayfarer retaliated via a smear campaign. I think she's going to struggle. She herself has admitted in a deposition she doesn't really actually have any evidence of that. But even if she does prove that, right? Again, shits and giggles. Let's walk with her. So at this point, hypothetically, she's proved she was sexually harassed on set, and then she's gone on to prove that there was some kind of retaliation via a smear campaign. She still has to prove that the losses were as a consequence of the smear campaign, of Wayfarer's actions. She cannot just say that, because even if she proves the other elements, there has to be a connection. She has to prove that those losses did not occur through, like, any of the factors I just described, such as redistribution, increased costs, increased marketing, and etc., change dynamics, or just the fact that people thought her products were shit. And I say that quite bluntly because I'm not going to play them in this video, but you can go on to YouTube and you can go on to TikTok and so many places, and I'm sure Wayfarer will have done this because I've done it, and I know loads of people have done it, right? There are so many huge influencer type hairdressers and beauty experts who have tried her products. They've done a video of them testing the products and come back and said it's awful for them in the vast majority of cases. I have an issue with her hair care. Where's the fucking conditioner? Who the hell markets a hair care quote unquote range that doesn't have a conditioner? I'm so outraged by the lack of conditioner. I need a conditioner more than I need hair care mist. I do. I remember telling, I can't remember if I told Zach or if he read it on one of my ex posts, and he didn't realize there was no conditioner. And Zach was like, serious? Serious? And he was really outraged. Because I cannot imagine my life not, using a shampoo but not using a conditioner straight after. My hair would look like lily blooms if it did. It would look like a bird's nest. It would just be unmanageable, frizzy, and just horrible. So there are numerous reasons why her company may be, in a loss. It's Blake Lively's it's her onus really to prove that the loss was caused by the actions of Wayfarer, and she can only do that after she has proved the protected action, i.e. the sexual harassment, and that they did retaliate. I think she has got an uphill battle, and I think she's going to struggle. So I'm going to wrap that up. Hopefully that will have helped a little bit. But I mean, again, amazing work by Emmy, because it got us talking about it. It wasn't entirely right, but I love the logic and the thinking process that went into it. But if nothing else, it got people talking about, oh, okay, is this what's going on? And there is no wrong question, because even if your conclusion is wrong, by asking the questions and by looking into it and saying to other people, I mean, she admitted totally she wasn't sure what she was reading, but by asking those questions, it kind of got us looking into this and talking about it, because this is the area that most people don't find interesting or exciting, but it's equally important because this goes to her damages. Okay, I'm going to sign off here now. Yeah, I don't know what I'm doing next. Maybe go back to transcripts. We'll see.